Here, joining us from Singapore with more on where oil's headed, we have Dominic Schnider, Global Head of Commodity Research at UBS Wealth Management, joining us today. Hi there. So why do you think we have lower crude prices expected for the first half of the year?
Well, if you look at the demand side, it is really weak. If you look year-on-year, demand growth really came almost to a standstill. I think this is likely to continue. You're going to see lower consumption in the developed world, and even from emerging market, you're going to see less incremental consumption. And I think this warrants a lower price, especially if some of these Iranian supplier risk concerns starts to fade. And I think some indication could be the fact that we have seen here Ahmadinejad probably losing power in the parliamentary environment, and I think that's, could really lead to lower prices in the short run.
Okay, when you say lower prices, I mean, could we go below 100? Could we go below 90?
No, I would say in the short run, what we might see here is a dip towards 110. Probably even lower, but that's not going to last for a long period of time. Such weakness would probably come later in the year with increased consumption from emerging market. We expect emerging market to accelerate, and I think that really provides the necessary base for later on prices to rise. So if you ask me what's going to happen over 12 months or towards the end of the year, then probably we're standing at 120 again. But as I said, in the short run, market is really not looking at the demand weakness, all about concern the supply side, and I think this is too much lopsided.
We should be very clear for our viewers. When you were just talking about, I guess, your predictions for Brent crude. I want to talk about West Texas in particular. So what could be the depths for West Texas crude prices?
Well, if you look at West Texas crude prices, then I would assume that, over time, the discount that we have will narrow towards $5, $10. So towards the end of the year, if you think about Brent trading at 120, we're looking at 115, 110 for WTI. So basically sideways over 6 to 12 months horizon.
Okay, what about the headlines coming through from China this morning in terms of capping its forecast? I mean, we're looking at GDP growth of 7.5%. That's what they're predicting for 2012, the lowest in 8 years. Is that going to impact oil prices, commodity prices going forward?
Well, we do think that incremental demand is going to slow from China. And I think if you look at the upcoming numbers that we get on Friday, you're going to see a lot of disappointment, and I think that will point into that direction. That call that incremental demand is probably just around 0.3, max 0.4 million barrels really allows us to see here the weakness. But probably towards the, I would say, second half of the year, once the economy starts to accelerate, you also see better credit numbers. I think we easily can go up to 0.4 to 0.6 million barrels of incremental demand. And I think then you're going to see really a more sustained rally in the crude oil price.
Okay, one more question for you. Wow, I was taking a look, Dominic, at your gold targets. You're looking at $2,200 an ounce over the next 12 months. That's a rather bullish. Best bet in the commodity space, you think?
Well, we had this 2,200 always there since the last, I would say, 6 months. I think the main reason is you're going to see central banks continue to provide much liquidity as needed. I know we got some dampening factors from Ben Bernanke, less dovish comments, but I think you're going to see probably some U.S. data rolling over, especially now over the coming months, and that definitely could provide more quantitative easing in the coming 12 months from the U.S. We can't rule it out, and I think that provides the necessary base for higher prices. Keep in mind, you're not rewarded on your banking account. We still have deep negative real interest rates, and I think that warrants to have some real assets in your portfolio.
All right. Good talking to you this morning, Dominic. Enjoy your trading week. Dominic Schnider, UBS Wealth Management, Global Head of Commodity Research.